Already. Today, Monday, April 13th, 2 days before tax day, 2006 at 7:25. You got a little copyright-free music. We'll see how copyright-free it is. But we got a little bit of that going on this morning. We got a little volatility going on this morning. We got markets kind of all over the place as talks over in Iran kind of go south. I don't even know if they even went north in the first place. I honestly don't think they went over there to make a deal. That's my opinion. I don't think it was. I don't think they went over there thinking they were going to make a deal. I think they got exactly what they expected. And, anybody who says different, I think you're foolish. And we'll see what goes on. We'll see how things go. Crude definitely spiked last night, so there's a huge gap in here today. Huge gap. We gapped from 96 all the way to 101. Went as high as 105. And we're pretty much sitting right about where we've been all night. We really haven't budged much. Been chopping and slopping around in there as well. And as far as equities, pretty much same thing. You look at the ES, big gap down. Right, big gap down. But we have been stair-step rallying quite a bit. And then we had a pretty nice rally last night at around quarter to 8. Around quarter to 8 last night, there was a really nice move. And as you go into the lower time frames here, you can see that we have really, here's the open. We have really come back, and this is right around the. Let's see, this is right around 10 to 8 actually, 10 to 8 last night Eastern time, and we've been really chugging along really well. That's the 5-minute, the 15-minute tells a little bit, I think, a little more distinct story, and we have really, and it's slowed down. Had since we did get highs overnight. It looks like 68.31. Now there's not a lot because we moved so much, like literally moved here. There's no real recent information on the volume profile up here, and it's not just the ES, it's every index. So we're gonna have to use good old-fashioned candlestick stuff and go that route, because there's not really going to be very much there today. So with that being said, I'm going to jump in and look at crude. A lot of blue up here, which is blue is buying. We do have a bit of a hole down here. I'm going to start turning some stuff on, and we'll go into the hourly. I do think, however, crude is going to be, I don't know, at least from looking at the charts, I think crude is going to be a tradable today. pending headlines, right? I mean, obviously that's going to drive everything, but we have a pretty distinct line in the sand here now between about 105.64 and about 104.81. So I'm actually going to put in an alert here on crude at 144. I'm going to call it 70. I like round numbers, so I'm going to go 104.80. 104.80 on crude. Just as a point of engagement, that if we get up there and there's really no headlines and we're kind of grinding a little slow, I do think it's a nice spot to take. It's a nice spot to possibly take a quick short. And I wouldn't risk a lot there. I would definitely put your stop under 105.64. I'd probably put it a lot lower than that. I wouldn't risk that much. And, it's going to be one of those things where if we get up there and we do start to get a bit of a reversal, I think it's going to be worth a trade. And, look for, don't be greedy, look for 10, 20 ticks. One of these moves here for a quick retrace back down, because it may actually, even poke up above this. So I'm going to just be using that as a point of engagement today. That is really the only spot that I see crude being anywhere resistance-wise. Otherwise, we're talking, we're like in the stratosphere at 117 here. That's a big move. And if we're up trading at 117 today, that means probably all hell's breaking loose over in the Middle East, and it's probably likely you're not going to want to take any trades at all. So that's it. That's really all I have in crude today as far as like what I'm looking for trades. That is it. And again, I don't even know if I would take this trade. I'm just using this as a point of engagement. I'm going to see what the price action is. I'm going to look for a reversal once we get up there, right? I'm going to look for confirmation and play that way. So that's all I have to say about crude. I'm going to jump into gold. Gold was pretty good. Had a couple of good trades last night in gold, both one long and one short. Gold's price action to me has been pretty favorable in moving. It's been respecting a lot of these support and resistance points. But just like crude, we have this big gap now that we have almost filled. I mean, we are pretty, I don't even know if we have, let me go to a shorter time frame, but we are pretty darn close. Not quite. 47.64, and it looks like 47.62. So we had come literally 2 points. This is 2 points away from filling the gap overnight. And you can see this huge candle last night came down, made this resistance area, and it's been up and away almost all night for gold, and I'm quite surprised that we've actually even almost filled that gap overnight. Now there is definitely an area down here that's not marked. This is on a 30-minute. I'm going to go into a shorter time frame to see if it actually fills. Because so it fills on the, because I seen it, hope everyone else. So like, look, folks, that's why it's important. Like, look, this time frame. So we start at the 4 hour, right? We kind of get a picture, which the trend, right? You start seeing these areas, all right? And then you start drilling in. And this is where you start looking for shorter term areas of support and resistance based on, like, you know, these are obviously going to be stronger points to watch. But also, you can already see here on a 1 hour that we've already started to base, right? We based here last go around, but here it really hasn't painted yet, but you can start to see it forming, right? You can start to see an area of support forming. So that's why you have to kind of use your eye a little bit and try and teach yourself to look for these without having them show up. And here now that I go down to the 30-minute and I'm already starting to see it here, right? And that's why when I go to the 15-minute, here it is. And now there's also one on the shorter term here up at 47.62 where we made the high before we were able to fill this gap. All right, so I'm going to use this area here as a support. Now you can see as you even go on a shorter time frame, it even becomes more distinct. And we're getting down in there now. I don't know if news, that's a pretty big move. I don't know if news came out or what. I'm actually going to go and look real quick and see if there was news, because that is a fairly decent. No news. So it's just normal price. It may be forthcoming of news. So anyway, I'm going to look in here and for quite possibly a trade down in here. And I'm going to look even now. I'm going to look. So I might take something down in here now because look, we actually made some pretty good support back here at around 1 o'clock, 2 o'clock this morning, or was it like midnight as well, right in here at around 5 or 6 o'clock. And we'll see if we can get a reversal in here, right? I'm not going to just go jump on this trade, right? This is a pretty big move down fairly quickly on a 5-minute, so I'm going to wait for a reversal. All right, and so that's really it in gold right now, because again, that's the way it's been trading. Let me see if I can actually go in here. I'm going to go into my account here and see if we can catch a reversal, make sure everything's turned on right, because I did a trade last night and I didn't realize I didn't have my I didn't have my my bracket in, and I actually went in with a trade with no stop loss. I was kind of like mortified. I was like, oh my God. I mean, thank God it's fake money. Thank God it's fake money. Thank God, right? No reversal yet. Right? This is a 5-minute, so usually it's a 5-minute reversal, right? It's usually because a reversal on the 100 tick really is a little misleading at times. And if we miss it, we miss it, right? It is what it is. Not a big deal. Not going to risk much on this. It's just I'm going to take one contract. You know, so this is the bottom down here of where we were looking, which was about 47.30s, right? Yeah, 47.29, and the actual line is at 47.32. So it's damn close. It's like literally right where it is. So we'll just keep an eye on it. And this price action, though, is just making me believe that there's something else, because we have not really traded like this all night, and it's just making me believe that there's possibly something. I mean, I just see this Goldman Sachs. I mean, there's this India's ambassador to India. Iran has oil and is ready to sell. You know, and I don't see any like red label news. So I mean, but it is, this price action here is actually kind of giving me a little bit of, there's news possibly maybe gonna pop. And maybe I'll take a look at oil. Let me take a look at oil real quick. Now, oil's pretty much doing nothing. I mean, and we've actually gone and breached this now. So this support area may not hold. It may or may not. We will see. Oh, God. And there it goes. But it still hasn't reversed on the 5-minute. But it did reverse here. It did literally touch that down here and take off. So pretty amazing. So yeah. Yeah, so we're watching gold. See if we can get a trade live here. And it's looking like we missed. It looks like I missed it. I mean, even we did get, it did get a reversal on the 100 tick. But we still haven't really gotten the reversal here on the 5-minute, which is more of what we want to confirm that this is truly going to be a bounce and not just a fake out. Because gold loves to fake your ass out. Loves to fake your ass out. See that? See how it faked our ass out? Totally faked us out. Yeah, there's something brewing. Because this price action has not been doing this all night. This has been very, very slow. Even last night. Very sus, as they say. A little suspect here with this price action. Very, very suspect. And so I think now we can actually say that this is not being respected at this point. Again, it still could. I mean, because these things are nothing's perfect, right? None of this stuff is perfect. And this could very well, rip now. But is it enough to do a trade? That's the other thing you got to realize. I mean, it looks really interesting here, but when you boil it all down to it, you're talking this trade from here to here with a micro is maybe 23 bucks. It's probably something like this. It's like 20 bucks, 20, 25 bucks. Not that that's a big deal. That's fine. I'm not really looking for that. I'm looking for something a little bit better than that. I want something that I'm going to be able to, I would like to be able to ride this back up to possibly to fill that gap here. still not ready yet. All right, so that's gold. It's doing what's doing. It's chopping. See, I mean, it's definitely faking. It's definitely faking some people out. Look at this. Like, right? They just something's going on. Something is definitely ready to hit the tape or something, because there's no way this is moving like this. Oh God, crazy stuff. Something's about to hit. And why do I keep losing my bracket order on here? All right, so this is off the table, and this very well may bounce, but to me, it's not really confirming that it's going to bounce here. Gotta have a lot of things going on, right? We have a second candle now that actually kind of breached even further. If anything, this does not. I could be totally wrong too. Again, anything can happen. This thing could rip back up. I just don't see this being confirmation that this is going to rally here. So anyway, switching gears, let's go over to the NASDAQ. NASDAQ, same thing as gold. Pretty much have this big gap. We have not filled it. We haven't even come close, not even as close as gold did. But we have been stair-stepping up all night. We are under a little bit of pressure here. And we do have a pretty firm area of support down here at 24,911s or so. I'm going to have to start drilling in a little further to kind of get any other semblance of areas of support. It does look like 25,051s. 25,051s. Kind of like that on the short term. That's on a 15-minute. I'm actually going to add an alert there. 25, and I'm going to call it 25,067s for a possible long. The only spot up here that we could possibly even think about even shorts is up at 25.34. So if anything right now, just based on the price action from this morning, I'd be looking for longs here. I mean, hey, if you were able to get short up here at that swing high 25.193, good for you. You're sitting pretty good right now with a pretty decent trade. Hats off to you. But that's about all I see on the NASDAQ as well. Because, again, the price action here and that gap kind of takes a lot of things off the table. So you just have to be aware of that. I'm just going to go and look at gold again real quick. And, yeah, it did reverse. It did reverse, but that was not very clean, if at all. Not very clean at all. So I'm actually glad I stepped aside on that. So let's go to the Russell. The Russell, I think, is going to be a bit better trade today, only because it seemed to have made a really nice support area right here around 26.16. And I think if you look at it on the 1 hour as well, the ranges here seem, in my opinion, a little more doable at this point. And the price action's been, honestly, I think has been a little more normal. And then as you start to drill back here on this area down here, 26.067s, look very interesting to me for a possible long if we do get down there. Again, like the other indexes, pretty long way. It's got to fill that gap for it to get to any areas of real resistance. And that is kind of the story there on the Russell. So that is pretty much it overall. Again, I'm not talking like, everything that I'm doing right now is, I just put the pivots on there, and I'm going to get rid of these. I just put the pivots on here just for aesthetic reasons, just to show that they're there. They really have not, when you have markets like this that are so headline driven, a lot of these pivots kind of get tossed off. The pivots are more, they're more for a normalized market, like everyday kind of churn and burn stuff. They're very, very reliable. But when you're in markets like this that have extremely high headline risk, they kind of disappear. Because again, you're not trading on, the market's not trading on technicals. It's trading on shorter. These pivots are all based on the previous day's price action too. And so it's an accumulation of an entire day. And if you notice, like all the time frames that I'm looking at for trades right now are short term, 5 minute, 15 minute. I'm not looking for like daily. I'm not looking for that big swing trade like we used to be able to get. Like oh, we're going to catch the market on a down day. And, okay, so we can look at that long term and then say, all right, I'm going to go short at this level. And there's a good chance you're going to get a normal retrace on a regular trading day. Same thing if you went long, and then, you might be in that trade for an hour or an hour and a half, grinding it in the trend. We just don't have that in these markets right now. Everything is short-lived. Everything's quick. And everything's like, it's see money, take money. And that's how I'm trading it. And that's why I'm looking at these shorter term time frames for trades. And I'm not looking to be greedy on these things either. I'm looking to just get in and get the hell out as fast as I can. And if I can make, on one micro, make 50, 60 bucks, on a couple of contracts, have it be $150 or $200 trade, so be it. That's what it is. And all I'm trading right now is micros. I'm not even trading, like I've been trading the big Russell for 2.5, almost since the beginning of the year, pretty consistently up until the last month and a half. I have not traded any large mini contracts. Everything's been a micro. And again, it's because the price action just doesn't support me using the bigger size. I would rather take the smaller size and use more contracts if possible and manage risk that way than use the big contract. And again, because these moves just are not, look, when you look at hindsight and you sit back here and you say, this thing really ripped. If you're in a trade and you've seen how this thing was trading on the 5 minute, or even like if you're using a tick chart, it'll give you a heart attack, because it's like literally like coming in almost every single time, pressing your entry. Literally almost every single time. And a lot of times it will actually take you out and then rip back the other way. So, and then the micros allow me to use bigger stops as well. So anyway, there's that. And so that's why I'm looking at the shorter time frames on all these products. And so that's about the size of that. And then gold, you can see here, gold has not gone anywhere. Although it's holding here, it has not gone anywhere. I almost feel like it's waiting. It's waiting here to either, rip everybody's face off to the upside or rip everybody's face off to the downside. That's kind of where I feel it is right now. And so I would rather, rather than play that 50-50 shot, I'd just rather sit on the sidelines. So that's what's going on. So that's what's pretty much going on over the futures. As far as stocks are concerned, as I mentioned, the group of stocks that I'm sticking with right now are all range plays. And what I mean by range plays, I'm overall short the software stocks. I think you can continue, and yes, and last week's price action proved you can continue to stay short these stocks because I think they are going to continue to be under pressure. And I think things, stocks like Apple, and I hate to say it, and to a lesser extent even Netflix, I think are going to bode better in this market than many of the others. And so I'm sticking to those. But I'm not just getting long and I'm not just getting short. With the likes of Netflix, I particularly like selling puts under 90. I think it's actually shown that 90 is a pretty good area of support here. Let's go to the daily even. On this last pullback, it's actually done relatively well in a market that hasn't done very well. So, there's that. And so I do like puts under 90. And if you really want to be aggressive, sell calls over like 130 up here. So it's basically 90 to 130. I preferably like the puts a little better because, you have a lot more potential for range to the upside on Netflix than you do to the downside. So that's how I'm playing the likes of Netflix. Apple, little bit different story. I like the range in here. I actually like selling puts under 245 and selling calls over 280. 280 to 290. I like those trades. Now, again, these are shorter term, so I would look at May expiration for these still. So that's how I'm playing those. I'm staying away from the Metas, the Googles, although Google has done okay as far as because I'm already in stuff long in Google, so I don't want to go out and say, buy it. I mean, it's got highs of 346. It's basically right smack in the middle of that high and that interim low that we made back in February, right? So do I want to be in there? No, I don't. I don't like it because it's right smack in the middle, and it's basically a 50-50 shot. You're rolling the dice. I mean, that's fine if you want to do that, but you're rolling the dice. You want to get long, fine. Everybody wants to get long, right? Nobody ever says, I'm short, right? But, what kind of power do you have, or what kind of power does this need to really get back, not only back up here, but even make new highs? Because that's really why you would buy it down here, because you're looking for it to make new highs. I don't know if it's there right now, few months out, 3-4 months out. Yeah. All right, it might be fine a year from now. That's fine, but I'm not looking that far. So I'm staying away from all these. I'm staying away from them all because to me, I don't see the catalyst there for them. And so that's how I'm playing. And these are the big tech stocks. Same thing with NVIDIA. I mean, although it's had a good run, so is everything else in the space. Like Intel is probably the success story out of all these. Intel has just been a beast. And I'm not going to tell you to go jump in long Intel and it's not all-time highs because this thing was a lot higher at one time. But, as far as the last, I think it's probably at a 5-year high, to be honest. I think it's, last time it was up in the 60s was back in 2000, is that 2020? And last time it was even in the 70s was back in 2000. 2000. So, Yeah, so I wouldn't tell anybody to jump in long there if you aren't already long. As soon as the government announced that they were getting involved in Intel, I bought some. Always wish you bought more, but I definitely bought some. But I think a lot of these other ones, too, have kind of missed the boat, right? If you didn't get long on Micron down here, what are you going to do, chase it? No, stupid. Same thing, AMD, right? If you didn't get long down here, 188, what are you going to do? You're going to just chase it? You know, Broadcom. You know, I feel fortunate. Broadcom. I was buying it down here. I was actually getting pressed pretty hard. I was buying it under 300, and I got pressed pretty hard on it because it did go down to like what 290. SanDisk, same thing. At what point, you know, you're going to chase it? That's fine. You want to do that, play that game. I just not interested. So that's kind of where I'm at with stocks overall. I don't see a lot of there. To me, there's like no excitement in it. And then you know my opinion on all of these. I think these are all like CoreWeave. I'm in that trade, and I actually said, and it's still like, look, it's still in this spot. It's still in that spot. You know, am I going to be right? I don't know. You know, I'm in a high probability trade. I got a good shot of this thing being in this range by mid-May. I don't know. We'll see what happens. This one I'm getting pressed on a little bit. I actually sold, right? I mean, this one's not working out so well. I'm getting pressed on my calls. I sold calls over 140. I'll tell you exactly what I have. Positions. NBIS. Where is NBIS? Where are you, NBIS? I was actually getting, I'm down $88. So I'm getting pressed. I sold the 140, 145. And those are in April. And I got 4 days left on those. So I got to do something. In those. I've already rolled my puts out to May on this Iron Condor. So I have to do something. I'm either going to sell this and just eat it, which I may do. I don't know if I'm going to roll that. I prefer to probably just sell this and eat it, and then maybe sell another Iron Condor in May, something that's maybe a little more tighter, maybe something like a 110 or something. But I need to do something because I'm getting pressed on that one. But I still like that trade because this thing overall, regardless of the headlines and regardless of what all the influencers say and all the other jackass that come on and try and say, yeah, I told you. This thing is known for doing this. It's known for, rallying like this, but it's also known for fucking collapsing really fast. So, again, is it going to happen again? I don't know. Maybe it goes to freaking $400. I don't know. But anyway, that's my trade. And I still like that overall. I still like selling calls up here. I still like selling calls up and above. Like probably the one standard deviations is where I'm going to go now. But let's take a look at NBIS. Because I've traded this really well this year. So I'm not going to complain. So if I did a May, the one standard deviation is a 190. So I'll sell the 190, 195 up there. I already have those puts. I might roll these up. I'll likely roll these up to like a 115. Yeah, I'll roll those up to like a 115. So I'll sell those calls, and then I'll roll this put up to like a 115. And I'll create myself like another Iron Condor. It'll be two trades, but I'll create myself another Iron Condor. And I'll play that game. All right, and so that's it with NBIS. And I kind of feel that way with all of these stocks in this space. Other than, as I said, other than CCJ, I think that one is actually, I still think, I hate to even tell anybody or say anybody like, but I still think even here, it's even a decent long. But going into it, that you got to realize that if you're going to go in long here, that, it's had a good run and it's had a nice bounce off those lows, that you can get stuck. But it's got good volatility. I think, again, it's in a good space, right? I think this whole nuclear thing is going to take off. And I think it's already kind of has, but I think it's in its infancy as far as where it can go here. And I think, but, so, and I would prefer long trades on that So I would sell puts. You could either sell puts in May or June. Doesn't matter to me. Depends on what your time frame is. And I think you can stick right around the one standard deviation, which is like $90. And so a 90, I always like to do 10 wide. A 90-80 puts you at an 85% probability of profit. You could probably do it. Excuse me. You could probably do this one for $1.20 today. And, play this one that way. Or if you don't like that, buy the June. So buy the June like 110 and sell the May 115. Now it's going to cost you some money. It's going to cost you about $600. But you get yourself about 6 deltas. And you're selling a little bit of premium, right? You're actually selling a little premium here on this 115 with the calendar spread. So either the call diagonal calendar to be exact, or the put spread, the vertical credit put spread on CCJ. All right, and that's all really I got, because that's really the only thing those are the only things I've really been trading, folks. I really haven't been doing like much in the options world because, again, it's just, and as long as volatility staying high, I'm just not seeing, I know Tasty Trade has their whole thing. Look, I've been around a long time, and I've been trading with them on and off from back in their days in Thinkorswim. And I have learned over the years that although their strategy works really well when volatility is normal overall and then it spikes, but when volatility remains extremely high the way it has, doing all these volatility trades, folks, you don't have the liquidity. Trust me, you do not have the liquidity to play the game, to play that game. That is a big account player's game. And if anybody's going to tell you different, I can show you my results. I can go back and show you my results, and they haven't been good. And when I've strayed from that approach, especially now, during times like now where volatility's remaining in the 20s and shit, and doing the strategies I'm doing now, which I'm doing more calendar spreads as opposed to just selling options, the calendar spreads do much, much better in this environment, and they're less harmful. And so gold did bounce, you son bitch. Yeah, they're much, much less harmful than the credit spreads, because the credit spreads, again, is if volatility continues to stay the same and not contract, and it continues to stay high overall, you wind up eating your margin in these trades, and you wind up sitting in trades so much longer than you should. And that is where you wind up. And then what happens is because you're in those trades, and look, we all have limited amount of funds. And because you're in those trades and you're waiting for volatility to collapse, you're foregoing opportunities because you don't have the capital. And again, that's why I say that this volatility game is a big account players. And I'm not talking about just any big account. I'm not talking about a couple $1,000, a couple $100,000. I'm talking millions. Like if you have millions of dollars to trade in your options account and you have that kind of liquidity, then you can play this game, because then you can hang in there a hell of a lot longer than somebody who's got a few 100,000 and, may only have 25 or 30% of their assets in trades like that. And that's me. because I don't have all my money, right? My money's all over the place. I got real estate in my house. I got stocks. I got options. And I don't trade everything in options. And I have money market funds and T-bills. So I have cash, and I'm not going to sacrifice my cash to do these trades knowing that, oh, well, the probabilities say if you hung in there for 6 months, it's like, I don't want to hang in there for 6 months because I don't know what the fuck's going to happen in 6 months. I might need the money next week because somebody in my family might get sick or anyway. But anyway, I don't want to get down the road. So anyway, just be careful, folks, is what I'm trying to say. Be careful. And so that's all I got. So gold kind of faked us the freak out. It did wind up holding support down here, and it did bounce. And so, and there you have it. And so that's all I got. Crude oil still kind of doing nothing. And most of the markets overall kind of still meandering around, although we are getting a little bit of a bounce. They're still just kind of chunking around right now. So, all right. So that's it. That's all.